G'day guys, welcome back to Mango Invest. In this video we're going to take a deep dive into the dividend portfolio in a very transparent sort of way. So if you're new to the channel, I seek to be really transparent with you guys because you've seen a lot of YouTube and even Instagram investors that don't really show you specifics. They say that they're buying certain companies, they say that they've got all this amount of profit and they're doing so well, but they don't actually show you the ups but then also the downs. So as you can see here, I'm currently got $278,000, of which today was negative by 4,259, which has brought the total profit down to 11,359, which is 4% of the portfolio. It wasn't actually too long ago where I was actually up to, over $300,000, and, the total percentage of the portfolio was 20 to 25% in the green. So it just goes to show how quickly it can collapse when there is a little bit of a fear into the market, like they're putting in these days, like interest rates rising because the Fed won't lower them and all these other ridiculous things that are just cyclical. Like it doesn't really stick. There's just a cycle that ebbs and flows. And if you look throughout history in the S&P 500, it does fluctuate. So we're just going through another, fluctuation at this time. But as of right now, the current buying power within the portfolio is $104. I put most of the other money into Realty Income Corporation. So due to the prices dropping so far, I saw that as an opportunity. So I put that $2,000 in there. So then I've just got some more recent dividends with the $104 there. But the first one is Apple. I've been investing with these guys for ages. The total value I've got so far is $25,000, of which just over $7,000 is total profit. So you can see the daily change there, that it's negative $606. With all these companies, every sort of week, it's slowly reducing and reducing and reducing, all based off, some ridiculous news. I know like the iPhone 15 came out and then no one was happy about it or whatever, but, that happens every single year they bring out a bloody iPhone, is that, no one's ever, happy. So they, everyone just sells their shares in the company and, the next week later it's back up again. So it's like, if you like the company and the fundamentals, just keep investing with it. Like, it makes no difference. The next one I own is AGNC. It's a real estate investment trust. So the current value I've got is $9,000. Currently negative 3,326. A lot of people say that this is a dividend trap because, as you can see there, it's got a 14.89% dividend yield, and equity just keeps reducing and reducing. So what everyone is sort of getting at here is, for the amount of equity lost being $3,000, like we haven't even made that amount up in dividends, which is why they call it a dividend trap. It's because when companies, up their dividend yield to try and sucker investors in, but I've been investing with AGNC for, over a year now, and they've made a couple of recent acquisitions, and I feel like they're just going through a bit of a rough patch, but I really do look at this company as a long-term sort of dividend investment. So I'm happy to keep these guys. The next one's Alibaba, and I'm not really going to do an introduction. Everyone knows what Alibaba is and the risks that come with that. But the total value is $24,000, and this is all US currency as well. And I'm actually negative, just under $13,000, which is absolutely huge. But have a good feeling it's going to come back. But these guys don't pay a dividend at all. So I'm waiting until I do get a little bit of profit, hopefully, 2x my money, and then I'll redistribute that out to dividend paying companies there. Bank of America, I've had this since 2019, and the real reason I bought it was I just wanted a couple of different sort of sectors within the portfolio to start out, and banks was one of those. And the Bank of America was just one of the popular ones on the US stock exchange. So current value $7,000, and I'm only up by $232, but I don't really care about that. It's all for the dividends. The next one is Bank of Montreal. It's a Canadian bank, and the current value is at $8,000, and I'm up just under $1,000 with that. But again, it pays a really good dividend, so I think I'm going to hold this for the years to come. The Bank of Nova Scotia, another Canadian bank, current value is $9,500, and I'm actually down or just over $1,000. That's fine. Got a GoPro share. One of my subscribers from the channel used my referral code, ChrisM965, when he signed up with Stake. So I got a free GoPro stock, and then he would have got, some other random sort of stock of whatever his Stake's choosing. But that was pretty cool. Now the predicament with this is it's only worth like $3.15, but in order to sell a stock, it's going to cost you $3 because Stake have that $3 fee, which is annoying because, dividend investor, I want to just get a nice short dividend of like $10 from a company and then straight away invest that into other paying dividend companies. But it's hard to do that because now I'm only really getting $7 because of that fee. So now I just wait until I get a larger sum of money when I deposit, plus also get some dividends. So I really wait until I've got, like $1,000 or $2,000, and I only really spend it into that one dividend company. So then that way I'm only getting rid of, $3 just for one trade, as opposed to, doing multiple trades. Jeppy, now this is the crown jewel of the portfolio. This is my absolute favorite dividend paying company. I've got 588 shares, and that's increasing, dramatically. Current value is 31 grand, and I'm down just over $1,000. But at the rate in which they pay me dividends, it's gone up to $200 per month, or USD currency there. So that's absolutely huge. JP Morgan got 71 shares, and the total value is 10.3 grand, and I'm actually up, $2,571. So JP Morgan is good. Just pay me consistent dividends every 3 months. It's not a huge position, but it's very good nonetheless. Coca-Cola, I sort of invested in this because it was a safe bet. The dividend yield isn't too high, but when you think about like recessions and everyone buys cans of Coke, right? Like I don't really see Coca-Cola dying anytime soon. It's a very, very popular company with a really good moat compared to other companies. That and Pepsi are on the same sort of level. They're both good companies, though I just chose Coca-Cola because I think that's a little bit more popular. But currently got 11,000 in value and just under $1,000 in profit so far. But they pay me consistent dividends every 3 months. LTC is a real estate investment trust. Got 481 shares, and the total value is just under 15 grand. But I'm actually negative just over $1,000 there. LTC is another one in the same basket as AG&C. It's a real estate investment trust, and people call it a dividend trap. But if you really look at the fundamentals of the company and the financial statements, they've actually done a couple of good acquisitions in terms of more real estate. So I'm keen to see how that elevates the company. The next one's McDonald's. Currently got $11,000 in value, and 2.5 grand is total profit, which is 30% of my total input. Now Meta. This company, when they changed from Facebook to Meta, and their different sort of priorities going into the metaverse, and everyone just sold out because they were just a little bit fearful that Facebook were changing their lines of effort or whatever. But I just took advantage of that. I had some spare cash laying around, so I bought in just to see a quick little upside. But it's taken a little bit longer than what I thought. But I've got $800 in profit now. I want to see if that rises just a little bit more. And then I'm going to sell that and then place into other dividend-paying companies. 3M, I've been investing in these guys for ages now. These guys pay a really solid dividend. I've got $3,400 in value, but just under $2,000 is all negative there. If you look at Triple M's history here, like they just keep reducing and reducing in value. Haven't really done too much sort of research on 3M. But everybody knows the products that they sell, a wide range. They have a lot of demand and need within everyday life, and you see products everywhere in every single store in Australia and overseas. So it's safe to say that 3M will be sticking around for a long time, and their products actually have a lot of value within society. We've got Microsoft. Now this is probably the biggest player of the portfolio. It's my biggest percentage so far. Now I've got 36, or let's just say $37,000 in total value, of which $16,000 is total profits. That's 80% of my total input into the company. Now Microsoft is an important part of the portfolio as well because it's my major growth company. Like they don't really pay a dividend, as you can see there, at 0.94%. But at the rate in which they grow and they elevate the portfolio, it just brings so much value. And to be quite realistic, I do see Microsoft reaching in excess of $450 per share, and I reckon they'll go through another stock split later on to make that stock price look a little bit more attractive. So that'll be good to see in the future. Realty Income Corporation. Now, this is another special one as well. This is the monthly paying dividend company, as they call themselves. Have currently got $19,600 in total value, and just under $5,000 in which I'm negative. Now, this is a company that's really been hit with all the negative sort of news, but they also are diluting a lot of their shares. They're issuing a lot more shares into the company, which, brings down the stock price and, really makes it look a lot more attractive to investors. So they're trying to unlock a little bit more value, trying to get a lot more investors on board to increase their equity. So this is definitely a company that I'm going to double down on, take advantage of that dividend yield of 6% now. So every bit of money, every dividend, every deposit is going straight into Realty Income Corporation. QYLD is another ETF which tracks the Nasdaq's top 100 and gives off a solid dividend yield there. So the current value is $13,000, negative 360, very stable, very good ETF there. SCHD, this is the one that everybody talks about purely because it has a 5-year compounded growth rate of over 13 to 14%. So the dividend in which it's increasing is quite rapid, and that's what gets investors pretty excited. But the value is $9,300, and I'm currently negative $500 for now. But as that lowers, along with Realty Income Corporation, I'm going to double down on SCHD. There's SPHD as well. The total value is just under $8,000, and I'm up 1,361 with SPHD, which is good, which is like 20% of the total input that I've had. AT&T, just under $5,000 of value, and just under $2,000 is negative in there. So, and then Tesla, I've been investing, with Tesla for ages, since 2019. I was one of the, ones who locked it in at a $250 per share price. But then they've gone through multiple stock splits, which made, the shares in my portfolio $58. We'll just quickly have a look in there now. So each share that I own is averaged to be, $58.28. And the current stock price here is $244. They've just recently announced that they're going to, reduce the cost of the vehicles, which, I don't know how that's going to react for the share price, whether it's going to have a negative or positive impact. Like, is that going to attract more buyers for the cars because they're a lot cheaper? Who knows? Time will tell. But I've only inputted, $2,300, and the total profit I've got so far is $7,335. Now, it wasn't actually too long ago where the profit margin I had was like over $12,000. So that would have been a good time to sell, but I missed the wheel on that. I'm now just going to wait till it goes back up again. But Vici, another sort of real estate company that buys all real estate in Las Vegas and all the popular joints there. But the value's just over $6,000, and I'm currently up $152. So all in all, the total equity within the portfolio is $278,000. Today I'm down $4,259, but in the total grand scheme of things, I'm up by $11,359, which is 4.25% of the portfolio. But that's just equity there alone. I'm currently getting, like $12,000 to $13,000 in dividends every single year, USD currency. So for the dividends, if you translate that to Australian currency, I'm getting over $20,000 of dividends. That's obviously, before tax, of course. But that's the goal, is to try and get that dividend income up to 40 to 50 grand. Yeah, it's going to take some time, but that's definitely the goal of the portfolio, is to live off the dividends and retire early. Right, now we're going to move over to track your dividends just to see just a little bit more. So with the annual income, you can see, I'm sitting at $12,230 USD currency, but that's just like an estimate, because people, they cut their dividend, they add more to their dividend, so that's just like a rough number. It's not really set in stone. And same as all these annual income on the right side of the screen that you can see there. So Apple's paying me $141, AG&C $1,421 every single year. Let's scroll down to Jeppy. This is by far the biggest hitting player of the portfolio, is $2,389 every single year. LTC, just over $1,000. Realty Income Corporation, $1,203 every single year. And I'm going to go hard on Realty Income Corporation. I'm going to obviously take advantage of the lowering of the stock price then, and that's going to see it elevate up to plus a $2,000 every single year, which I'm keen to see. QYLD, $1,643 every single year. And here are all the other ones. The positions aren't sort of as big, so therefore, you know, it's not really worth going into the other ones. But here you can see like the expected dividend graph every single month. So for September, which a dividend video is going to come out in a couple of days, so I'm expected to get just over $1,000. We'll see what the actual number comes to when we get through that video. And then October, over $1,000, 912, and you get the idea. And we'll just quickly show you the dividend sort of spreadsheet that I've been filling out. So here on the left, every single month and how many dividends you earn, you just input the amount of dividends you earn for that month, and then it formulates like an average monthly and annual income. So here I'm now up to just over $1,222 for the last month that I got. For July, I got 781. So you can see like a little bit of a graph and like a slow progression every single month. But here is what we want to look at here. So the average yearly income. So the last reported one was, and this is back in May 2023. I'm going to have to update that in the next couple of days. But it's roughly sitting around like $11,000 to $12,000 every single year on average. So let's look at on the average monthly income. So this is May 2023. So we're going to have to update this as well, which I'll do next couple of days. But the last report was in May of 2023. The average monthly income is sitting around $910. So naturally, you're going to get your higher months of $1,500. You'll get your lower months of $700 or whatever it is. But as an average, as we go up the year, that just sort of increases, and it comes to $910. So pretty good there. And again, this is all US currency. And just scrolling back up to the top of the page, so I can actually add up all the dividends that I've got since 2019, all the way up to September of 2023. So 4 years of investing, 4 years of getting dividends, and we've reached a total amount of dividends of just over $25,000, which is pretty awesome. Again, US currency, we're probably looking at Australian currency of $40,000 roughly. Go do the math, go do the translation on Google or something like that. But it's, I don't know, probably sitting at 37 to 40 grand in Australian currency just through dividends alone, and that's in 4 years. Now this isn't including obviously the equity in all the companies that I've sold as well to get that capital gain. So a lot of money just from putting your money into an ETF and dollar cost averaging over time. You can actually get to a lot of money fairly quickly. Like 4 years really isn't all that much. But that basically concludes the video. If you did want to stop by and see a dividend investing journey in a transparent sort of way where I'll show you all the downsides, all the upsides, all the dividends that I'm earning, all the SPYs and all the sells and all the deposits that I'm actually making within this account, subscribe to the channel, give me a thumbs up. It really, really, really helps out. And drop a comment below on how your dividend investing journey is going as well. Like, I reckon it'd be cool to hear from you guys and then learn to see what you guys are doing and give me some ideas. And hopefully I've given you guys some ideas of investing and dividends and all the rest of it. So thanks for watching the video, and I'll see you in the next one.